Ron William, technical analyst at MIG Bank, joins us live from Zurich. Hi, Ron. Good morning. Thanks for joining us today.
Hi, happy greetings from Zurich, Switzerland.
Ron, we're going to take your time through your four charts. And we're going to start with the Nasdaq, which it's a chart going back from 2000 to the present. And it was only a week or so ago that the Nasdaq itself crossed 3122. That was the highest since November 2000, Ron. We're at a key level now, aren't we?
Yes, well, I mean, this is the big headline for the month. We're at a historic price barrier on the Nasdaq Technology Index as the market has retraced officially half of what it lost since the 2000 technology crash. And so just from a psychological perspective, the market does have a memory, and that has created a price barrier where we've already seen a few percentage point setbacks and in my opinion, further pullback to come.
So, Ron, I mean, I'm just pointing at the chart here for our viewers. I mean, this is the key level right here. This is the 50% level that Ron was telling us about. If we cross that level, Ron, 3120, what happens next?
I mean, that would be very positive for the market. I mean, just going back to the meaning of that level, that is the halfway point to the big crash of 2000. So just for a lot of investors and traders, that would be a key juncture for the market to bypass. Although history does prove, in terms of just general chart analysis, that markets tend to kind of pause and take a breath at these important areas before they do eventually break above, if they do. So we may likely take a rest at this point, and then in the future, maybe medium term, long term, we might see further gains above that level.
Ron, I want to move it on. I want to get on to Apple, because this is the stock, of course, that goes from strength to strength. On Tuesday, it hit a record $644. Where are we now? Where are we heading?
Well, Apple is something that I'm calling an irrational kind of price move at the moment. One of the new devices I'm sure they've developed. I mean, it's been a straight line move up into 600, about 55% year to date. So you would have made very good money, and a lot of people have on Apple just this year so far. But the deviations are pretty wide, historically wide, above the long-term 200 moving average, which is what I've just put there on the chart. And just very recently, there's an important kind of market timing indicator, the Mark sequential indicator, which suggests that there's exhaustion in price momentum and a potential reversal over the next few days and weeks on Apple. And this would very much be a healthy pullback. I mean, the market has done, the stock has done so well in such a short space of time. So this would be quite healthy for some long-term buyers. Ron,
I want to finish with Spain. The IBEX, it's down, the benchmark stock index in Spain, it's down by 11% this year. We've got a chart here. Are there further declines to come? We know about the risks surrounding Spain right now. What does the stock market technical analysis tell us?
Well, I mean, technical analysis kind of theory and practice teaches us that stock markets generally act as a leading indicator to economic moves in all countries around the world. And the Spanish IBEX stock market is no exception. We're actually verging on a kind of a major topping formation, multi-year bearish top formation. And that suggests that if we do get a confirmation by the levels highlighted there, that long-term trend line I've drawn there on the chart, that things could get much worse for Spain. And we could be seeing a rotation of risk from the popular kind of Greece focus back to Spain. And also, if you look at the Spanish CDS credit default swap, that is also punched higher above its peers in Portugal and Italy, just suggesting that we might get some further event risk over the next few weeks and months. And this may also just generally increase volatility in the market at